Hello everyone and welcome to a new video. We'll be doing this video to recap the free seminar that we conducted yesterday about the next investing opportunity in the stock market, and we'll be explaining everything. So if you missed the seminar yesterday, you should be finding everything inside this video. Hope you enjoy it. Let me start with a quick introduction. My name is Ayub. I'm the technical analyst for stocks and ETFs in Elliott Wave Forecast, which is a forecasting company. It's been in the business for the recent 12 years. We do these type of free seminars from time to time when needed to explain our view about a certain matter, and if sometimes we know that the majority may disagree with us or think otherwise, but we keep explaining new ideas for the public. We developed our own system using different tools. So even we are using Elliott Wave as a main language for us to communicate our ideas to members, but we also use cycle, sequence, time, distribution, correlation among Elliott Wave. So it's a combination of many tools to which we allow us to have a good system to be able to forecast the market and provide us with trading opportunities. So our primary forecasting tool isn't just Elliott Wave. We know Elliott Wave is great. It's a good tool to help us read the market, but we believe Elliott Wave isn't enough alone. That's why we used other tools to combine it to predict the market. So in today's seminar, we are going to talk about the next investing opportunity in the stock market, and will be related mainly to the commodities and especially the mining stocks. So we'll start talking about the commodity, which has various of instruments, and it's been traded since the start of trading. A lot of traders love trading commodities, and it's has a large base of traders around the world. So we can classify commodities into three categories: the metals containing our base metals like copper and zinc, or the precious metal mainly with gold, silver, platinum. These are the metals that everyone would love to trade. These are well-known metals. There is other ones, but these are the main ones. We can also use the energy category, which will be containing the crude oil, the coal, the natural gas, the gasoline. So these are composition for the energy sector. And the agriculture one contains the wheat, the coffee, the hogs. It can also be classified into different categories, but these are the main ones, three ones that we would love to talk about in the commodities. And our main focus will be the metals, because we believe that there is a big cycle already ended in metals, and they are leading the way to the next move to the upside. So we'll also be doing another free seminar in another day, which will be talking about energy sector, energy stocks, but this will be another day. For now, we'll be focusing on metals. So let me move on to the idea how we are explaining this category. First of all, if you want to be able to forecast any instrument, you need to have an overall idea about where sector it belongs, how it's trading in the long term, what kind of event could affect this instrument. So if we have commodities, we can't just, for example, take gold alone and start analyzing gold. We need to have an overall idea about the cycle of commodities, how it's trading, and how we can look to trade it in the next move. So to be able to do that, we will be using indexes. Indexes representing commodities, because there is a lot of indexes which have, which represents many type of commodities. So let me show you in a second. These indexes, maybe you know some of them, maybe you don't, but the well-known one are CRB for example. These indexes are just a basket of commodities which you have a lot of commodities inside, and it will reflect the price of the movement of these commodities. So it's like a moving average for a basket of commodities, and will help you to have exposure over all commodities, and you have the cycle in front of you. So instead of just analyzing gold, if you want to know the big cycle for commodities, you need to check one of these indexes and start looking at the chart to understand how this works. So as I've been saying, CRB is one of well-known commodity index. If I believe it's one of the oldest one. It's been here since 1958. It's covering a lot of commodities. Let me show you the composite of CRB to have an idea. So as you can see, this is the official composition of component of CRB. We have many instruments here, including aluminium, the cocoa, the gold, natural gas, soybean, silver. So as you can see, it's a mix of a lot of commodity, exactly 19 commodity, which will give you an idea of the market. But indexes are different from each other, and each one of them is heavily weighted in some degree in different sectors. So for example, this one is the CRB is heavily weighted in oil. As you can see, this is oil, crude oil. As you can see, this has the major part, and if you want to categorize it, you can point out that energy, agriculture, precious metal, and basic materials all have different percentages. The leading one is here for the agriculture, because if you add up the cocoa, the corn, the cotton, you'll have a bigger percentage. And even so, energy is also presenting 39%, which is really big for this CRB index. When we will see the chart, we will notice that it's trading same cycles as oil. It have similar chart, and as expected, because oil has the most percentage affection here. Another one known is GCC, the Wisdom Tree Continuous Commodity Index. There is also other ones like the Dow Jones Commodity Future, the S&P Commodity Return Index, which was before the Goldman Sachs Commodity Index. We have the Bloomberg Commodity Index. We have the Dow Jones UBS Commodity Index. There is a lot of others, but just I'm mentioning this one because I will be using it in our explanation in the charts to explain the cycle for commodities. Because before we jump to the metal and mining stocks, we need to know the bigger cycle and why we are looking to trade or invest in these mining stocks. So let me show you just really quickly, for example, another example, which is GCC. The component of GCC is a bit different. So this one is heavily weighted in oil. GCC is has only 11% for energy, but the rest is grains and divided on soft and precious metals. So as you can see, different indexes have different components. That's why you need to use many indexes to combine it to have the bigger picture clear for you. So because every index has different component, it's like a mix of everything, which will give you a better result. So let's start with the CRB, our main index for now. I'll put this chart with labels, but we'll be later on moving without labels, because I will be just explaining the cycles, and really the labels, Elliott Wave labels, don't mean anything for now. The important thing is calling the cycle correctly, which will help us decide the next move. So a simple Elliott Wave read for this cycle from 2008 peak, which is the stock market peak, can be classifying this, can be counted as an ABC from the peak, and currently you will be looking for another leg to the downside. So this is, a normal count can be an ABC with 1, 2, 3, 4, and currently looking for wave 5. but we don't usually just use one instrument to analyze the market, and this isn't enough to be calling for more downside in the commodities and commodity sectors. As you can see, the RSI still didn't break. So if you use just the CRB, okay, you'll be saying this will be going to more downside, and we'll be looking to sell, we'll be looking for lower oil, lower gold, anything related to commodity is going to trade at the downside. This will be your first impression. But we use other instruments, we follow a lot of commodities, and that's why we call the cycle for oil completed, we call the cycle for gold completed. These are the two peaks for gold from 2011, the peak from 2014 of oil we already called completed, and this index is kind of lagging the move. It's still, because technically it still can extend lower to reach equal X from 2008 peak, which will take it toward 95.31, and in that case you can see, you can say gold can trade lower below 1000, oil can trade and see lower levels, but I will show you why we don't believe so. So let me move on to the second index, GCC. I will go back to CRB to make the conclusion later on, don't worry. So GCC, as you can see, this is another commodity index and have the same cycle. This is 2008 peak, and this one already reached equal X from 2008, around 1726, and also from 2011. So unlike CRB, this one already reached the extreme area from there, and already bounced higher. And you can see the RSI already also break into the upside, which means this cycle already ended, at least this cycle or cycle from 2011. So for now, you expect a bounce higher happening in this index, which will be reflected on the X of commodities. So we have another index different from CRB. This one technically can be calling to more downside, but this one technically say that have enough number of swings and reach the extreme area, so it can start trading to the upside. Even if it managed to make another push lower, it should remain as an extreme area and should be seen a bounce. So either way, the cycle is indicating that 2008-2011 has ended or ending, and will be seen a bounce in the coming years, will take the commodity higher. Because this one is heavily weighted in grains and soft, that's why these kind of commodities that we were talking about previously, as you can see, the soft one like coffee, grain like wheat and corn, maybe in the short term they are still seeing more downside. We are not going to talk about it for now, but we need to be aware that three types of commodities. This one is the one leading, the metals are leading, the energy are lagging, and the agriculture one are still in a bearish cycle, maybe in the short term. But the one that we are looking to focus on is the leading one, which is the metal sector. That's why for now maybe GCC isn't the best example, but either way this is ending 2008 and give you an indication that the commodity will be turning to the upside, because it's also have metals in its component, so it's same cycle as the rest. Okay, so let me move on to another one which is related to the energy, the GSCI energy index. As you can see, also same peaks for 2008, 2011, 2014, and as you can see, this one didn't manage to reach equal X from the peak, which is a bit lower, around 23, but we believe this cycle has ended already, at least from 2014, same as oil. You can see the trend line in RSI already broken, so but the RSI, the trend line from the peak still didn't get reached, but this is an early indication that this cycle has ended already and will be trading to the upside. So we have GCC bouncing from equal X, breaking the cycle from 2011 in RSI, this one breaking the cycle from 2008, so we are adding just it's like these are clues. We need to pick up every index. We make the conclusion and move on. Then we make a conclusion for the commodity sector. So this one from equal legs. This one break the RSI. Moving on to a second one, which is the DJ Commodity Index. This one is even better because 2011 cycle, which is the cycle for gold, already ended in price and in RSI. As you can see, in RSI already broke here earlier last year. This is 2016 low. This is the low in commodities, in oil, in gold. So this is a shared low between any commodities that managed to rally last year. That's why this is really important. The strong bounce here managed to end this cycle, and currently we have a strong break, starting a strong break above this trend line. So this is also another indication that this cycle has completed. So this is one of the leading, if you can say, because it still needs to break above this peak of 2017 we saw early this year to confirm that we will be extending to the upside. Because after we manage to break this peak, we will have a bullish sequence that we would like to use, because in Elliott Wave forecast we define the sequence and cycle using our sequence count, and this will be not a 5-wave move, but we will be calling 1, 2, 3, 4 and 5, which is the 5th bullish incomplete sequence, because from here you expect 1, 2, 3, 4, 5, 6 and 7 swings to the upside. So says when you break this peak, you will have a bullish sequence calling for more leg to the upside, and if you calculate the equal legs from the lows, it will give you a higher target around the 706. So this is one of the indexes that's giving you an idea that we are pushing to the upside. And let's move on to another one, which is the DJ UBS Commodity Index. And this one is even better because it's breaking now above the 2008 trend line. So this one 2011, and this one breaking above the 2008 trend line. So this is also a bullish sign. It already, you can see it in RSI, retested the broken trend line and starting to break higher. So all these four indexes are pointing to one thing: more move to the upside. So if you go back to the CRB chart, then we won't be calling, even we still didn't have a break in CRB, but you won't be calling another leg. Instead, we will be calling for this cycle completed, and this will be also following the same path. That's why I wanted to start with this example to show you that one index or one instrument, if you take gold alone or CRB alone, it won't give you enough information to understand how the market works. That's why you always need to correlate the move with the rest of the instrument. You need to look at other commodities. You always have to have an edge over the market, and that's how we do it over Elliott Wave forecast. We follow many commodities, we follow many indices, we follow many commodity currencies, Forex, pairs, and that's how we are able to forecast the market correctly in the right direction. So now, after we defined our next move in the commodity sectors, which will be to the upside, now we will be looking for the strongest one at current stage, which are the metals, and we will be using some other instrument that I will be bringing. These will be our stocks for now, and I will be explaining each one of them with charts and explaining the ideas for that. So let's move on to the charts. These are divided by the production, because these two, for example, oil, gold and non-gold resource, main production will be, and main mining will be gold. Hegla mining, Wheaton will be silver. This one will be both gold and silver and copper. CLF will be focused on iron ore. Freeport is a larger producer of copper. Alcoa is aluminium stock. So these are the main metals, and these stocks represent the metal sector. That's why we'll be looking at them. So let's start with the. So we'll be relating every move every move in the commodity indexes will be reflected in the stocks, and we'll be also talking about other stocks or other instruments in the meantime, so not only looking to trade these instruments. So let's start with the oil gold, because this is one of the best. As you can see, let me show you. This peak, this is the 2016 peak. This cycle is the same as this cycle started from last year. So this stock RGLD managed to make a push to the upside, same as the rest, and now this is the most important thing, it managed to break 2016 peak, which is really important because it created a bullish sequence to the upside. If you remember, I told you here, for example, in this one, the DJ Commodity Index, we need to wait for this peak to break before you can look for the next push to the upside. This stock related to gold already made that move. So this one already has a bullish sequence. We already wrote an article about it, and it's going to extend to reach equal X from here around 123. So this one is leading the move in gold and looking to keep extending higher. That's why this stock is a buy in any dip. You can look to buy it after it pullbacks in 3-7-11 swings. We use 3-7-11 swings, which means any pullback in 3 waves is a buy if the cycle is bullish. If the first 3 wave bounce fail after making the bounce, then you will be looking for the next sequence, which will be 7 swings, 1, 2, 3, 4, 5, 6, 7. If then this one also fail, we'll be looking for the next sequence, will be 11 swings. So overall 3, 7 or 11 swings. And the way to trade it is we'll be using the Elliott Wave corrective sequence. So as you can see here, we have the corrective Elliott Wave sequence like zigzag or flat or a triangle, double 3, triple 3. But our main tool will be the double 3 or the zigzag. The zigzag is just an ABC. So if you see this ABC move, 3 waves pull back, you would love to buy it. Then you will be looking also of the WXY, which is just 7 swing sequence, will be something similar to this. So it's a combination of 2 zigzags, double zigzags, so ABC, pull back, bounce, then another leg as an ABC or even a WXY, it doesn't matter. All you need to do is look for these 7 swing sequence or just 3 waves pull back. Then you can look to buy it for the next leg to the upside. So what's really important about this, let me delete this, is that we are still also below this 2012 peak, which is the equivalent of the gold peak of 2011. It's a bit different but same cycle. And if we manage to break that peak, it will be opening a bullish sequence from all-time lows from the 91 low. So this is, as you can see, cycle to the upside, 3 waves pull back, and now starting another cycle to the upside. So this is really bullish for the rest of commodities, especially for gold. This one taking this peak will open a similar cycle to this one, which will take it higher. The equal X from here is just around the same area at 125 and higher, but this could be only the first leg of the move, which means we could be seeing something similar to this. A pullback from here and another cycle with this is wave 1, wave 2 and starting wave 3 higher again. So that's why this cycle is bullish in the short term, and for long term run you can look to buy these kind of pullbacks looking for extension higher. So this one RGLD is leading. Let me move on to another one, which is Ringgold stock, Ringgold resource. In the short term it's have a different cycle and structure, but we are looking for the same idea. This is your 2012 peak, similar to the previous one, but this recent move in 2016, the surge higher here, didn't manage to break it. It just missed it by a few pips, few points. So, but overall the cycle remained bullish, and we expect the same thing. Cycle from here, we had the correction, and now we expect it to resume to the upside. So it's the same idea. We still need to break this peak to confirm the bullish sequence, but in the short term, I'll show you in the short term, we already have that move happening in the short term. As you can see, this is the recent peak of 2017. This is the previous one. So we currently still making higher high, lower highs, and trading to the upside, which means we expect this to remain supported. Any pullback in 3 waves, any 3 waves pullback is a buying opportunity to take it to new highs, because this one is showing a bullish sequence from here, as I explained it before. 1, 2, 3, 4, 5, 6 swing pullback, another leg to the upside. So even in the short term, this one is providing you with a buying opportunity against this low. So this is another stock related to gold, supporting the case for more upside in gold. So we have now RGLD and gold. Let's move on to a silver related mining stock, which is Hecla Mining. Let me switch to the monthly chart to explain the idea. Okay, I need to delete. This was the line from yesterday, need to be deleted. This is a really important stock, because as you can see, we have cycle from 68 peak. This is 1968. This is really important. It's been trading to the downside since then, and as you can see, recently it started trading sideways in the recent years, which kind of building a bottom, and expect this move to break to the upside. Let me show you with this. As you can see, this is also just 3 waves cycle. You can see 1, 2, 3. So after 3 waves, you expect a bounce to happen. So the least scenario is to see a correction a correction of this cycle, which will take it toward the 50 back, 23, 29. So even this move, if it happens, is a huge move to the upside. Okay? And the most bullish scenario will be to trade above this peak. We'll be looking to make new highs, but it needs to take it step by step. For now, we are breaking above this trend line. This one already break, and now we're tested and starting to move to upside. We need a break above this short-term peak of 2017, or sorry, about November 2016, to confirm that we have the bullish sequence from 2015 low. So it have a different short-term cycles, but we have this peak 2008, this peak 2011. So we go back to our indexes, same peaks, same cycles. So you expect the same thing. If this one is calling for a bounce higher, you expect this one also to do a bounce higher, at least short-term bounce to correct these cycles, which already happened. As you can see, we reached 50 back, that's why we reacted lower. And now we expect another cycle to the upside, which will take it to equal legs from 2000 area, around 13, 60, 16 area. So this is also a buying opportunity. You can look to trade it. Let me now move on to the short term. The way to trade it is either to wait for this peak to break before you are looking to buy the next pullback. So either you wait for this move to happen, then you buy the next pullback, or if the stock managed to make the double correction like this, you can look to buy it at the next equal legs area. So this is only your investing opportunities will be to wait for the next extreme or wait for a breakout, because this is the middle of the range, and we really don't like trading in the middle of the range, because anything could happen here, because as you can see, it's a sideways movement. It already did 3 waves pullback. As you can see, this has been already 3 waves pullback there. So, and followed by a bounce. We don't know now if it's going to do something similar to this, start going to the upside, or this bounce will fail and you see a leg lower. Anyway, this is a buy lower. It will be giving you a good risk reward if you put the weekly here. You will see what I mean. You are going to buy against this low. So if you buy it here, let me suppose the equal legs would be, one moment, let's suppose this is trading low against this peak, then you will be looking for a 3.14 area to buy it there for the next move to the upside. Other from that, you need to wait for this peak to break. Okay, so on the long term, Hekla mining adding the same view to the Royal Gold, which is a move to the upside. So a bullish stock for long term investing. It's now only trading at 5. If you expect it to trade toward 23 or 16, this is a really good trading opportunity. Another one will be the WPM, another silver related stock. This one currently still needs to show us that it will trade to the upside, because in the short term it's not showing a good structure, a good bullish structure, but you will remark this is the same cycle, 2016 low, this is 2011. This cycle has ended. We already had the bounce. As I'll show you, this is already traded at 50 back, so same as Hekla mining. And now this cycle in the short term has ended, so you expect another push to the upside. So you need to wait either for this peak to break, or in the short term you can look for a bullish sequence or structure in the short term to be able to catch it against, first of all, this short term low, which is December 2016, and mainly 2016 low of January last year. Okay, so for now, first step will be to take it higher toward 24, and next target will be 38. And ideally, of course, we'll be looking for a move to new highs in the coming years, which will be toward the 55 area. So that area higher will be your equal legs from all-time lows, and should be a long-term investing opportunity if we are looking to buy gold or silver using these stocks. Then you will be looking for new highs. This could take you many years to reach the target, or this could be an aggressive move like the one from 2008 low. It will be a straight move to the upside. No one can know the speed and timing of the move. All you need to do is to know that the right cycle is to the upside, and you need to keep looking for buying opportunities. Moving on to another stock, which is a mix of copper, silver and gold. This one is also looking to trade higher. As you can see, this is the monthly chart. It's kind of sideways. It's not clear as the rest, but as you'll be seeing, this is the same cycle as the rest. This is the surge higher around the 18th for silver and gold, when we saw the spike higher in silver around 50 and the move higher toward 800 for gold. This stock traded toward 81, and since then it didn't manage to make new highs. This is similar to silver, because silver is the only one that didn't manage to break that peak. So for now we expect it to at least do something similar to this, and will be eventually looking to finish this cycle like this, take it to new highs. So step by step, but this cycle already showing us a bullish bullish sequence in the short term. Let me show you how it will be, how it's looking in the short term. As you can see, we currently have this cycle from November of 2016 reaching a short-term extreme area. So we'll have two options here to buy it. Either we want to trade against this low, which is kind of retracement, and it's not favorable, but if it's going to trade higher like the rest, then you expect it to hold this low, and this could be providing a buying opportunity in 3 waves like this to trade it higher. Another scenario is it will be doing the double correction from 2016 peak. We need to always consider the second scenario, which will be providing you with a buying opportunity later on around the 23.45 area. So this is another buying opportunity here, either from here or either from here. You would like to buy it, which will take you later on to new highs. Let me show you. The target will be around the 72 area, 75. So this will be your target if you are looking to invest in this stock. Then you have potential to trade to more upside. Short term, let me delete this to show you the short term target from 2016 low, because every setup need to be traded step by step. So first target from this low will be around 60, then you expect a pullback, then another move towards the 80. So this will be your next target for NEM. Let me now move on to another important and interesting stock, which is CLF. It really have interesting structure. Let me delete all these and explain everything from the start. So as you can see, from 2008, we keep reminding you 2008, 2011, 2014. So 2008, this is 2011. This one is similar to the CC. So it did 3 waves, as you can see, and it should be ending this cycle. This cycle should have ended or ending, and you should be looking for a correction of at least 3 wave bounce against this peak, which means the minimum target will be for this 3 wave bounce toward the 50 back area. So you expect this stock, which is currently trading at 8, to trade higher towards 61. So this is a really good move, a huge move to the upside. It could take few years to reach it, but will eventually get there, and overall will eventually could manage to make new highs later on above the 100 area, 125 area. So first step will be to reach this 50 back area, then we will see how it goes in the coming years. Still too early for that, but this is a really good opportunity to trade it. Let me show you that it missed equal legs from the peak, similar to CRB, because as you can see, this one, the equal legs is coming below 0. That's why you don't expect some instrument to reach equal legs, because this one, the only option to reach equal legs will be 0. That's why it truncated here, ended this cycle, and started trading to the upside, following the same cycle of commodities. So this is another argument you can add, because for example, CRB, if you are expecting CRB to trade lower like this, then you expect the same thing for oil. Let me show you oil here, and let me put oil. So if you trade, sorry, not in the same chart, 1 second. US. So if you expect CRB to reach equal legs from 2008, around 95, then you expect the same for oil. So in that case, you expect oil to trade around 0, because equal legs for oil comes just around 1 area. So you expect a barrel of oil only worth $1 or 0.07. It doesn't matter, but this is really cheap, around the $1 area. And if you like to see this move, then you expect oil to do the same. So for now, that's not acceptable, because we know that this cycle ended, so oil will be trading higher, same as the rest of commodities. As you can see, this move we are not counting. Just I wanted to explain how technically you can label anything, but Elliott Wave isn't enough alone, because you can label it like this, or as I showed you, like this one, but you need other instruments that give you an edge, other tools that give you an edge to know which one will be the right count, which one will play out. That's why you always need some other tools to help you identify the market. So going back to CLF, I said this one expected to bounce higher. So moving on to the shorter term view to explain the move in the short term. This one is short term, really provided a good buying opportunity earlier in May. We talked about it, I posted it in the social media. This reached equal legs from this peak. We know this cycle has completed. As you can see, this cycle managed to reach equal legs. As you can see, this is 7 swings, 1, 2, 3, 4, 5, 6, 7. So this will be looking, really weird, because if you just learn Elliott Wave for the first time, you will just understand that the market moves on 5 waves, and the bullish, the impulsive wave is only 5 waves. But here in Elliott Wave forecast, we believe market can trade both ways, and using impulsive wave 5 waves, or using corrective waves like this one. This is using a double three sequence, which is 7 swings, 1, 2, 3, 4, 5, 6, 7, and market can be advancing in this way. So this is one of the few things that we added to Elliott Wave. As I explained, Elliott Wave isn't enough, and it's been, Elliott Wave has been established a long time ago, and we need to be adapting everything to the new market, the new movement. You always need to adjust to the changes, and that's how you can be a successful trader and analyst in the market. You can just take, 1 + 1 = 2, but if you want to label anything using just the classic rules, then you will be finding it difficult to follow these rules, because we need adjustment, and that's how we are labeling and adjusting everything in Elliott Wave forecast. So CLF for now, after it found buyers here, now it has short-term bullish sequence. As you can see, also another 1, 2, 3, 4, 5, 6, and you expect it to trade toward 9.45. So let me count it again, show you 1, 2, 3, 4. This is your 5th swing. You are doing 6 swing pullback, then another leg higher. So this cycle will be similar to this one. You reach this area, you pull back, and then you advance higher again. This is how we explain the market. So if you like to trade it, you trade the 5 swings bullish sequence, either on the short term like this against this low. Otherwise, you need to wait for this peak. If you are a daily trader and you would like to trade it safely, you wait for this peak to break, then you can look to buy the next pullback. It will be similar pullback to this one, because it will be 1, 2, 3, 4, your 5th swing to the upside. You would like to buy the 6th swing pullback for another leg to the upside. So it doesn't matter which time frame, it's the same idea. You would look for a bullish sequence, you buy it during the next pullback. Other from that, we would love to see another scenario, will be making double correction. We always put this scenario in case it happens. If it may manage to make something similar to this, then your next opportunity will come lower, then you can buy it against this low. So that's the way to trade CLF. And the short term, it has a bullish sequence, it's providing buying opportunity. You need to keep in mind the monthly chart. I'm always showing you the monthly chart for now, because these are investing opportunities, not just a daily 1 hour trade or a 15-minute trade. These are long-term investing opportunities. These trades could last few years, if not months, and you will be seeing higher levels in any commodity, especially mining stocks. These are all mining stocks for now. I will be focusing only on that. So keep in mind, CLF next target is 61 in the coming years, and maybe later on we'll see new highs. So moving on to a really important stock, which is FCX. We cover FCX in our plans, so it will be only one that we talk about from our plans. This one also have similar structure. It did 3 waves from 2008 peak. This is 2011, and this one actually managed to reach equal leg. So this one was a buy last year around 5.45, and it's already trading around 15 area. So if you anyone who invests in copper, who was interested in buying FCX should have bought it last year if you are following FCX, and you are already tripled your investment, because this is, if you trade it here with the stop at 0, you're just risking 5 and looking for a potential move toward the 50 back of this cycle, at least the 50 back. I say at least because we're always looking for. So you are risking only $5 to gain $33. So imagine the risk reward is really big. That's why only trading at 15 is already doubling your profits. So that's why I say these stocks are one of the best, because they are giving us a really good opportunities. So if you miss this buying opportunity, don't worry, you still have another one next coming after it managed to break this peak, same idea. Or if you see a double correction lower here, then you can look to buy it. So you have too many options. In the short term, let me show you our chart. For our chart, this is only in the short term, because we are looking to trade FCX also in the short term. So let me also, the daily here, we quickly explain the same idea as I've been saying. As you can see, you need to wait for this peak to give up 2017. Otherwise, we will be looking to trade it against the short-term low, which is only a retracement. Because this can be tricky, because if it breaks this low, it will make the double. So you are trading a retracement against this low. Otherwise, you need to wait for a bullish sequence. And I'll show you our 4 hour. Okay, we were looking to, today we are looking to buy it here. It didn't manage to reach equal X for now. It still can do it. So this is a bullish sequence structure. As you can see, this is 5 waves from here, 1, 2, 3, 4, 5, and we are looking to buy it in the short term if it managed to finish this correction, which is just another 3 waves. This is WX because it's a double 3, but overall this is 3 swing sequence. And as I explained before, you have a bullish sequence, bullish cycle. You would like to buy every pullback in 3, 7, 11 swings. So the first 3 wave pullback for now failed. The first one failed here, bounced higher, made new marginal low, so you look to buy the next one around equal X. So if it managed to reach that area, that's first buying opportunity. If this one failed, then you will be looking for the next one and go so on. It will be against this low. But as I've been explaining, this is only a retracement. So this is only for short-term traders that would like to chase the short-term cycles. But the best way to trade it for the daily is to wait for this peak to break or to reach the second. Let me show you. It will be around the 9.77 if it managed to make the double correction. Okay, this is how we'd like to trade FCX. And keep in mind, this is monthly chart and really big move to the upside expected to happen. Copper already leading the way, because this is the main stock for copper, the largest world producer for copper. So if I put copper here, you'll understand that this is same cycle, same everything. As you can see, this is copper. As you can see, same peaks, same cycles. And you would be saying why copper ended this cycle here. It did 3 waves pullback. As you can see, 3 waves pullback and stayed traded to the upside. If you are looking to buy copper, you would be looking to follow this stock FCX, and when this stock reached equal X from 2008, then you close your eyes and you buy it here against 0, or you buy copper around this area. And as you can see, okay, my bad, I closed. Oh, let me open it again. I wanted to show the difference between these two. That, let me zoom out. This peak already is taken out in copper. So copper already leading the move this way. So you can see this copper is having a bullish structure and is leading the way because it managed to break 2017 peak. So you expect copper to remain supported, and the same idea for FCX. You expect it to trade higher and first target from 2016 will be equal legs from that low, which is around 24 area. So short term, that's your target for FCX, and you expect it to trade at least to that area in the first stage before going to trade toward the 50 back, which I mentioned it before, 33.66. So this is another bullish commodity stock. It's related to copper. We already saw silver, gold, now copper, and let me end with Alcoa. Alcoa, sorry, my bad. Alcoa is an aluminium stock, and this one managed to break 2014 peak. This is 2011. Even the structure looking a bit different, but this is 2008-7 peak. 2011 same cycles, but this one managed to break these peaks. So you expect it to find buyers. You can trade it as a classic trade. We have a break of this resistance area, and you can look to buy the pullback next to trade to the upside. But if you are using our sequence, okay, my bad, sorry about this, let me delete. We currently have a bullish sequence from here and looking to reach, I'm sure already we are reached that equal legs from this peak, from this low. Yes, we already reached it, equal legs from 2009. That's why you could see a short-term reaction lower. But the cycle from 2016 is still in progress, because this cycle is looking to reach equal legs around 55 area. So this cycle is also 3 waves from here. You can look to reach this area before a pullback. But I mean, Elliott Wave is great. It can give you also another scenario. It all depends how you count it, because this one can be counted as 5 waves, 1, 2, 3, 4, and 5, which will be ending this cycle as 1, 2, and 3. So 3 waves here, 3 waves here, and 5 waves here, which will be a flat structure. This one, flat structure, as you can see, 3 waves, then 5, and in that case you will see, let me delete these to explain, you will see a larger pullback like this, then continuing to the upside. Overall, it doesn't matter. Your 2016 low around the market is the key level for every commodity, every metal commodity stock that we are pointing out. So any pullback, 3 waves, 7 swings, it doesn't matter. It's a buying opportunity in the deep, and we are looking for a cycle higher in these stocks. So I think everything is clear. I hope you enjoyed it. I will be also adding more stocks in 1 second. Let me show you other stocks that I added recently. This one is from Australia, a mining stock also, which is also pushing the same idea as the rest. As you can see, okay, I need to show you the RSI. I'm just using the RSI because it's simpler to explain. So you can see this one already ended the cycle from 2011. This is 2008. So this cycle ended. It bounced from equal legs. It did 3 waves from 2011. So this is one of the best and clear structure. Sorry, let me show it like this. So 3 waves from 2011. This is like gold. It reached equal legs and now bouncing higher. As you can see, it managed to break this peak, this trend line, and what is most importantly is it managed to break this peak. So this is really like RGLD that we saw earlier. It has a bullish short-term sequence. Let me move on to the daily. As you can see, this is 2016 low. It managed to do bullish cycle, pull back, now started another bullish cycle to the upside. Breaking this peak is really huge for the market, and these are the one leading the move. So your next target for this stock will be equal legs. Let me show you from the lows. So this is another stock to add it to the list. you will be looking for 56 area. So any short-term pullback in 3 waves is a buying opportunity. So BHP RGLD is the same, because they both managed to break this peak. Let me show you another one, which is Rio. Yes, I'm not wrong about it. This one is also managing to break this trend line. Let me show you, but let's keep on focus on the most important thing, trading above 2017 peak. So this is also a bullish sequence from here, unless it will be ending as 5 waves. So it will be doing something like this. This is the alternative scenario, 5 wave move, 3 wave pullback and higher. This is also a buy against 2016. But you can also be looking for this cycle to extend higher as 7 swings. It all depends on the internals, and as long as this short-term pivot and low keeps holding, then you expect this cycle to extend like this. It will be looking to reach first equal legs around 62, then you see a pullback there, then another leg higher toward 84, which is equal legs from 2009. So you can see this is another mining stock pushing to the upside. This is the monthly chart. You can see 2007, 2008 peak, traded lower, and now started. This is 2011. We are looking to reach equal legs from 2008 low, which will be around 84 area. So short term we have Rio, BHP and RGLD have a bullish sequence from 2016 low, which is only adding more conviction because these stocks are from different places in the world. One from Australia, the other one from United Kingdom, the one from United States. So as you can see, different stocks, different commodities, but same result. We expect another push to the upside. So let me go back to RGLD. As you can see, still this one needs to break this peak to have even bigger cycle, but this is your appointed 2017 peak, which is breaking around many stocks. That's why you expect GCC to bounce higher. You expect the energy sector to bounce to the upside. You expect any indexes related to commodity to trade higher, which will be reflected in the rest of commodity stocks, and especially the mining one, because as I said, the mining stocks are the leading one, because the energy is still lagging, even we are expecting it to catch up later on, and the agriculture still have a bearish sequence. I think a bearish cycle in the short term. Maybe I'm not really following these one, but we'll be taking a look at them maybe later on. But for now, our main focus is the metals. Anything related to copper, gold, silver is a buy in the dips. Also, energy sector, we'll do another seminar about it. But for now, these are the main ideas. I hope everything is clear. So let me end with the gold to silver ratio, which we follow. This is another thing which is important. As I explained it, we follow everything, and one of them is gold to silver ratio, because we know that gold to silver ratio, let me show you, this is 2011 peak, low and this is the low in gold and silver ratio, but this is the peak of commodities. When we have the gold and silver ratio trading to the downside, we see higher commodities. When this one trade higher, we see lower commodities. So for now, we've been following it for a while, and we know this cycle has ended from 2011, same as the rest of commodities, and we already got the pullback. As you can see, we had 3 waves pullback into the equal legs area. This was early last month. This is 2016 peak, same as everything. So we expect this retest of the trend line and the retest of I'll put it like this. So this short-term retest reached an inflection area, which we declare the blue box, and you expect now at least another leg similar to this one, at least, which means 3 waves from the peak toward this area. So this cycle mean only one thing: bullish gold, bullish silver, bullish copper, bullish oil, bullish commodity overall. So you see this cycle has ended, so at least a 50 back correction. As you can see, same area. Let me put it. So you expect the gold to silver ratio to trade lower, which means this one will be seeing lower levels and the rest of commodities will be trading higher. If you want me to put another thing, which will be maybe difficult for you, but maybe new for you, I mean, not difficult, but I will be adding USD CAD. You will say, why USD CAD? What it have to do with the commodities? It's a Forex pair, but yes, this is a commodity Forex pair, because the Canadian dollar is related to oil, and as you will see, this will be sharing the same. This is 2011 peak, 2008, and this is 2016 peak. So these two cycles are the same, and now as you see USD CAD trading to the downside during the three-way pullback correct in 2011 cycle. So you expect the same thing for the rest of the market. The Canadian dollar is really leading the correction for the currencies. You have RGLD and BHP leading the stocks because it already made the equivalent peaks. So you have many instruments pointing to the same direction, which is bullish commodities. So that's our main idea for today, for the seminar, is that we'd like to buy mining stocks. Anything related to commodity is a buy, but our main focus is mining stocks. I've been through all of these stocks. I showed you all the charts, explained everything, how we'd like to trade it. We added also new one that are BHP and Rio. I will be posting later on this video with an article. I will put everything there. So you have the charts explained through the correlation with the rest of indexes of commodities. That's why we would like to see these commodities to remain supported in the coming years. So overall, you need to have always an edge over the market. That's why we cover a lot of instruments. As you can see, we cover 78 instruments for now, but we follow more than 100 because these are the ones that we offer to clients, but it's not enough because we need always an edge. As you can see, I showed you many indexes, many other instruments. So even we cover a lot of commodities like oil, copper, silver, natural gas, corn, soybean, but we also follow GCC, CRB, other indexes to give us an edge. We have a lot of Forex related to commodities like odd, Australian dollar, New Zealand dollar, Canadian dollar. We have other indexes. Also we have some stocks related to commodities like XLE, like FCX, like GDX. So we follow many instruments, and to be able to predict or forecast the market correctly, you need to understand how all these instruments are correlated of each other, and one move in some instrument is always related to another. So that's how we'd like to trade an Elliott Wave forecast. We also write a lot of blogs. We give also free educational articles. We have free educational videos. So we don't only rely on the current instrument that we cover, but we also share everything in public. As you can see, for example, this is the gold to silver ratio. We cover this in our blogs. We are predicting the move using these kind of explanations. You can find new charts or videos. We have different answers. This one is how we are last year, how we expected gold, and defined that the low was already in place. We explained that it was breaking the 2011 trend line. We correlated with the move of gold euro, not only gold related to dollar, because we follow other gold related to Australian dollar, to euro. I'll show you the chart for Australian dollar in a moment. And as you can see, correlated with silver. This is gold related to Australian dollar. We expected the move to happen. We expect the move to keep extending to the upside. We explain everything here. As you can see, we predicted before the buying opportunity for gold, which happened and traded now to other upside. We always share many articles about the commodities, and we follow it everywhere. These are different articles. This one to predict, to give you an idea which metal will be better in investing in the next leg to the upside. This is about palladium. These are other stocks like CLF. I was talking about it earlier, how we have a short-term bullish sequence and we would like to buy it in the short term, looking for a move higher. Last year we explained how the low in commodity was taking place, and our members were aware that it's not the best time to be looking to sell commodities. Last year you were hearing all the media calling for lower gold when it hit the bottom. You hear 800, 500 levels, but we are looking for a bounce in gold because we knew that we are reaching extreme area in many cycles, and we are looking for a low in commodities to take in place, which happened last year. So apart from that, we have many other blogs about the energy sector. The CVR, this CVI is another energy stock that we are calling completed. This is Gold, which I already showed you that we were looking for a move to the upside, which already taken place, showing a bullish structure. This is FCX, which we cover in our plans, and this is the recent one about RGLD that I already talked about, showed you that looking to trade to the upside. So overall, we cover a lot of stocks, a lot of commodities. So if you are interested in having any instrument and having any analysis to join our forecast, you can take this opportunity because we still have our end of summer sale, which is 50%. So you can get 50% of any plan you choose, because we have different plans. You can check here our subscription page. We have different plans. It covers many things because we cover the charts every day in different time frames. We do daily technical video, we do live session, we have a live trading room, we have chat room. We do have a lot of things, so you choose whatever you want. If you only want to have charts, you can choose the small plan. If you want to attend live session and have more explanation and have live trading room, you can choose other plans. And you can also, if this doesn't suit you and you want to try first, you can look for the free trial, which is 14 days of free trial. You will get access to everything you have. You need to choose one of each group, because you can only choose one group for the trial. So if you'd like to trade stocks and ETF, you'll be looking for the group 3, which I will be covering. You have group 2, more focused in indices and commodities, which is covered by Dowd and Henry. And you have the group 1, more focused in Forex, which is covered by Eric and Dowd. So we have a lot of instruments, we offer a lot of service, and if you are interested, you can send me a message either by email at Ayub at Elliott Wave forecast, sorry, not hashtag, sorry, Ayub at elliottwave-forecast.com, or you can send email to the support. Our Twitter is our main handle is Elliott Wave Elliott Forecast at Elliott Forecast, and mine is at Alienovicio. If you have any other question, you can contact us, and I hope you enjoyed this video, and I will be seeing you around. Have a good day, everyone.